We are going live here. Thank you for attending. My name is Dan Del Real with Caldwell Banker Commercial. Super excited to be talking with everyone today about how to buy a new home. By the way, we're going to be taking questions live during the comment section of today's presentation. So if you have a question, do me a favor, type capital C followed by your question so we can scan through and quickly find them and get you the information that you need. So we're going to get into some really valuable content pretty quickly. But first, I have something that I'm really excited to share with you. This is the start. So this week, we're starting something new. This is the start of a new show. We're calling it Know the Market with Dan Del Real. And this is a show that's going to be dedicated to helping you know what the real estate market is doing, how it could impact you, and also how to take advantage of opportunities in the market so you can buy, sell, lease real estate with confidence instead of getting held back by challenges. And so we're going to be pushing out content weekly. I was talking to a good friend of mine this morning. We were having coffee and we had a discussion around buying a home for the first time. And so, every day I always have real estate conversations. I get questions. People tell me about different challenges that they're having. And so, this show will be an extension of what's happening in real time in the real estate market and my business. And so I want to invite you along for that journey. So we're going to be delivering content in the way that people like to consume it. So we'll be after, for example, this webinar, we're going to take it and make it available by video. So we'll have a video version. We'll strip away the audio, and we'll have a podcast that you could download and listen to. And then we'll also post the show notes on my website. So be sure to, if that's something that sounds like could benefit you, be sure to go to my website, dandelreal.com, to learn more about that and get those free resources over the next couple of days. And we'll get you some information on where to find that shortly. So we're going to get into today's topic, and we have some really good content to share with you. Today, our special guest is Tony Smith, who is the producing branch manager at Cardinal Financial. Tony has more than 15 years experience in the mortgage industry. He specializes in conventional, FHA, VA, USDA, and first-time homebuyer loan programs for residential properties. Tony has a vast knowledge in this ever-changing market, which has enabled him to stay on top of the loan guidelines so that he's able to quickly identify where problems may arise before they happen and ensure that the loan process is smooth and on time for his clients. Tony's helped first-time home buyers, families who are moving up, and real estate investors secure loans that are a good fit for their financial and lifestyle goals. Tony's expertise and commitment to detailed communications throughout the loan process makes it possible for him to give his clients and business partners the best overall experience that supersedes their expectations. Tony's a veteran Marine and a longtime resident of Merced, where he lives with his wife and 3 children. He's active in his church and in his spare time enjoys coaching youth sports, triathlon training, and golfing. Tony Smith, welcome to the show.
Hey, Dan, how you doing?
Hey, doing pretty good. I just finished reading David Goggins' book, Can't Hurt Me. So when I hear Marine, triathlon training, that's kind of what comes to mind.
Not as quick as I used to be.
All right. So thank you again for being on the show. So before we get into the content, if I missed something, Tony, tell us a little bit about yourself.
Well, you kind of covered it. Been in the business over 15 years, producing manager, one of the owning partners of Cardinal Financial here locally. Work with first-time home buyers, investors, people moving up. Love what I do.
That's great. Yeah, there's there's, I can imagine, there's a satisfaction from helping people in doing what you're doing. So, some of those people that you're helping. So tell me a little bit about the type of people that you're working with, and what are the different types of people that you help?
Well, to concentrate on first-time home buyers, I work with all kinds.
Hmm.
Whether people come in, they're ready to buy today, or people that we need to put on a game plan, whether it be maybe some challenged credit, financially getting them in a position to purchase a home. But the main goal at all times is okay, if we can't do it today, what do we need to do to get you on the path and a game plan to eventually get into a home?
Got it. Okay. So people are coming to you that what are now when they first meet with you, what do they tell you? So what do they want, or what are some of the common things that you hear from your clients?
Well, I think everybody just wants, especially for a first-time home buyer, there's a lot of unknown, right?
Hmm.
It's almost a scary feeling of, it's one of the biggest investments and things you're ever going to do in your life is buying a home. And it's a scary process, but it really doesn't need to be. So I like to set it up as, I'm here just to educate you, give you the information, provide you with the tools, and then that way you can make a good educated decision on what works for you.
That makes sense. That makes sense. Okay. So people, it sounds like, are looking for clarity. They're coming to you. They want to buy a home. They're not exactly sure where to start.
Absolutely.
Okay. And then what are some of the problems that are keeping people that come to you who want to buy a home from moving forward? What are some of the problems that you hear?
Well, sometimes it could be credit related. And I'm working with folks like that. Really always say the answer is always yes. Maybe it's just not right now, but what do we need to do to get there? I've helped hundreds and hundreds of people get from a position of what they need to do in their credit to get it fixed, to get that score up if need be, to get them in a position. Sometimes it might be what type of money do they need out of pocket. There are several programs that can get you into a home with very little, or sometimes you do need a little more money for a down payment and such. And I'm here to guide you through that and help you with the process of what's needed.
That makes sense. Okay. So you mentioned a couple things. So credit sometimes is an issue. You also talked about the down payment. Now with credit, is that something that are there strategies that people can employ to help with that credit score? Or what do you tell someone who maybe has some challenge with their credit score?
Well, it's really custom fit to each person, right? Of experience to where it could be as easy as paying down some credit cards, which get the biggest bang for your buck and really get you in a position almost overnight to get your credit score where it should be. Or it could be more of a long-term plan of, hey, you've got some collections in conjunction with some charge-offs and maybe some late payments, and what we need to do to get you on a longer-term plan to eventually get you in that position to be able to buy. And then also just the knowledge of, where, instead of just spending money blindly, so to speak, on paying things off, getting you the strategy where you're going to get the biggest bang for your buck, where paying this down or paying that off might have a bigger benefit than maybe something else that's on your credit.
Got it. Okay. So there are things they could do to help move that score. And then it sounds like I imagine you've seen hundreds and hundreds of these scenarios. So you can kind of,
Sure.
you know what to expect, and you can kind of help them through, here's the path to follow to improve that score.
Absolutely. And there's different types of collections too. And, there's some that we can pay off very easily, get removed from the credit report entirely.
Mm-hmm.
Some that are a little harder, but just helping them navigate through what the best game plan is to get to that final goal of buying a home.
That makes sense. Okay. And then the other thing you said, sometimes people maybe need help with the down payment or something along those lines. I would imagine when you go to buy a home for the first time, some of the people that you're helping maybe aren't even sure, how much they have to save for a home. So in the same way that you're helping them clean up their credit or improve their score, I would imagine you're doing kind of the same thing with the down payment, giving them a target to hit and helping them through
Absolutely.
that.
And there's different loan programs that as we sit down, we're going to tailor fit which loan program best suits that particular borrower. Depending, there are some zero down programs in VA and USDA. VA, obviously, you have to be a veteran to do so, and probably the best loan. And really to reward our heroes and our veterans. USDA is also nothing down, but there are restrictions on that. There's different caveats to each loan too, where pros and cons to each. On a USDA, your debt to income ratio is going to be a little bit tighter, and you are restricted geographically to where you can purchase. USDA, you usually think like beef, right? But it's just who's backing that loan, and it is backed by the Department of Agriculture, and they it's a rural development loan. So, but we look at that. There are some first-time homebuyer programs. There's usually caveats that go with that too. But that's where just sitting down and just overcoming the unknown, which is really the first process with a first-time home buyer, just coming in. It doesn't cost anything. And we can go through everything and get you some good information so you can make a good decision.
Got it. Okay. So it sounds like everybody's kind of at a different place. People have different goals. There's no one size fits all solution. You kind of look at the individual or family to figure out what's a good solution for them. Tell me a little bit about that process. If I'm coming to you and I want to start the process of figuring out how to get a loan, what does that process look like?
Well, the first thing I'm going to do is just explain from start to finish really what it all does look like, right? I mean, really, there's going to qualify you for a loan. Pretty simple. First is credit score and credit history. If that's where it needs to be, then we're really kind of moving on to what type of down payment are we looking to do. And that's going to segue into debt to income ratio. The house payment with taxes, insurance, PMI, if you're putting less than 20% down, which the majority of most first-time home are going to be. That house payment can only be a certain percentage of the income, and then any other minimum monthly debts that show up on your credit report, in addition to that house payment, can only be a certain percentage of your income. And different programs have different tolerances on that debt to income ratio. We go through that, and then we go through the process, and I'll explain all the different loan programs and the caveats of each. And then we sit down and look at everybody's information, look at their financials, run a credit report, and come up with and tailor fit a game plan for them that best suits them and their family.
Got it. Okay. So it sounds like when you're first meeting with someone, you walk them through the process, you run a report, and then you'll work on starting to put that solution together for them. And it's going to be a custom solution that fits what they're looking to do.
Absolutely.
Right.
And all within probably 30 to 45 minutes and not taking up a whole lot of time to really break it down and what the game plan is. And that way they can leave the office knowing exactly where they are and what they need to do.
Okay. And that was my next question is how long does this take? And I know in today's environment, some people feel more comfortable, doing a phone call or using Zoom, and then, also in person. But how are you meeting with someone in, today's environment?
You pretty much covered it. And we do it all ways, right? And it really all depends on demographics too. Some people are a little more comfortable doing it one way than the other. A lot of the younger generation is much more comfortable what we're doing right now. Doing a Zoom meeting, definitely have the capability to do that. Some will just, you shoot them over an email. They send you all their information. And that way I can do all the heavy lifting ahead of time and work up all the numbers and present them with some options. But really, I do like it eventually, if not at first, like to meet with everybody face to face and really put a face to the name and the voice and be able to look somebody in the eye and shake their hand and really walk them through to make sure, they understand exactly where they are and what we need to do, and just give them a comfort level of, I'm not here to sell you anything. We're educate you and show you what the process is. And if it works for you, fantastic. But in the long term, buying a house should be everybody's goal. Otherwise you're going to be paying somebody else's mortgage for the rest of your life.
Mm-hmm. Yeah, it's that's a good point. And I do like what you said about you doing the heavy lifting, because I think sometimes, I know when I first bought my home, I really just didn't know where to start. I thought about, well, there's all this work to be done and I don't even, know where to start. And so it sounds like you're doing a lot of the work and you're trying to make it easy for the client.
Absolutely. And I say that all the time too. I mean, it's a scary venture. Like I said, it's one of the things you will do in life, probably behind getting married and having kids, right? My job is to try to make it as stress-free and easy for the home buyer as possible, and take a lot of the heavy lifting off their plate, and do that for them and present them with some options.
Okay, that's great. And so if I'm going to meet with you for the first time, do I need to bring something? Do I need to do some homework, or is it as simple as walking in and starting a conversation? What does it look like to start that process?
Everybody has their comfort levels, and definitely will sit down and start the conversation if that's where they want to begin. But really, to bring in some initial paperwork, I'm going to be able to give you a whole lot more accurate answers, so to speak. And that's simple as it's just really a few pieces of paper. If you're a W-2 employee working for somebody, all I need is your last 2 years of W-2s, pay stubs to cover your last 30 days, and a couple bank statements. And then from there, that might open up a little bigger needs list. But really, that's all we need, is to really sit down, and we sit down, grab a credit report, look through the financials, and put some numbers together. It's
okay.
Simple, really. It's just if the credit's there and where it needs to be, it's just a matter of plugging in the numbers and giving them some options, and two, talking to folks and seeing what their comfort level is. I meet with people all the time that, just because you're qualified for a $400,000 house doesn't necessarily you want a payment that goes with a $400,000. And really listening to their wants and their needs, and custom fitting something that's going to fit their lifestyle, and what's going to put them in the best position to succeed for them and their family.
Okay, that makes sense. So to get started, they could walk in, have a conversation with you. It sounds like the documents aren't necessary, but it's going to help move things along quicker, or help with, at some point in the process, you're going to need to see W-2, check stub, bank statement, and that can happen at the first meeting, but it can also happen later.
Absolutely. And it's the difference between a pre-qualification and a pre-approval, right? I mean, we can go off verbally. We do need a credit report. We can go verbally, hey, this is what I have in the bank, and this is more or less what I make, and we can put all that together. But once we can firm that up with some paperwork, then they can go out there with confidence, knowing that I'm not just pre-qualified, I'm pre-approved. And once we have all that, they know, we don't send things to underwriting and just really cross our fingers and hope things work out. Just with a few of those simple pieces of paper, they know that, you are truly good to go, and you're not going to be one of those horror stories you hear where things fall apart at the end, that what we start, we're definitely going to be able to finish and get done for you.
Yeah, that makes sense. Okay. And then the other thing that you said was, when you sit and you meet with someone, you can help them understand what the monthly payment would look like. I know that's probably a question you get, what am I going to pay for, because most people I think are used to their rent payment, so they're already used to paying something per month, that there's a line item in the budget for housing. And so, it sounds like when you sit with them, you're going to help them understand, this is what your loan is going to look like. This is what it would cost to pay your loan. If this is what it's going to look like to take care of insurance, all the different, line items that some of them might be new for buying a home. And so could you talk a little bit more about that?
Sure. I mean, that's definitely one of the biggest parts of the conversation when we sit down. I mean, because, a couple,
Mhm.
primarily everybody wants to know what's my payment and how much money am I coming out of pocket with, right? And
Mhm.
where also we can look at different loan programs to fit what somebody's looking for. But absolutely, when we sit down, that is the main thing that you're going to walk out with is, hey, number one, am I in a position to do this today? Number two, if I am, more or less, what's my price range? If let's say I want a $1,400 payment, right, with taxes and insurance and PMI, and I'm looking to put X amount of money down, or I'm looking to use this payment or this program versus that program, what's my price range? So that way, when they're out there,
Mhm.
the realtor looking for a home, they're looking at the right homes to purchase. And more or less, okay, as far as what's my down payment, what am I looking out of pocket? What do closing costs look like? What are my options of, perhaps I have enough money for the down payment. Maybe I need
Mhm.
some seller concessions and paying the closing costs, but having a good game plan to know exactly what they're up against or what they're looking at when they get out there in the market and they go shopping.
Got it. Okay. So it sounds like I think I heard you, Tony, say that a consultation might take 45 minutes or somewhere along those lines. Was that
Typically,
about right?
and that's about right, and that really covers everything. But if it needs to take 2 hours, we sit down for 2 hours to make sure that we're answering
Got
every
it.
questions. We're not here to get people in and get them out as quickly as possible. I want to make sure
Mhm.
everybody is completely comfortable and they know exactly what's going on. I might have a tendency to over-explain things at times. I'd rather they leave my office knowing exactly where everything is than going, I just don't know what the heck's going on.
Got it. Okay, that makes sense. And then you talked about some of the financial documents that people will need at some point. So
Mhm.
after someone comes in and they talk with you, when they leave your office, what are the next steps, or what's kind of the path forward after meeting with you for the first time?
Well, typically one of two things. Either if they're not in a position to buy today, we're going to leave them with a game plan of what they need to do and what we can help do together to get them in that position, whether it be helping get credit score, maybe, hey, we need to pay down some debt, or hey, we need to get on a budget plan of we need to save up X amount of money to be able to get into a home. How can we, together go through and put a budget that works for them, right? That they still have a little food with dinner, so to speak, but get them on a game plan, and that way they leave knowing exactly what they need to do and have somewhat of a accurate time frame of what that's going to look like. Or on the other option is, hey, they're good to go and we're ready to start shopping, and that's what I tell everybody is we're all a team from this point. So between them, the realtor, and myself, we're all working together, and they're out there going shopping and looking at homes. I tell them, hey, when you find a home or you're looking at a potential home that you want to put an offer in, give me a call, shoot me an email. I can really tailor fit and go to exactly what you're offering on that home, let you know darn near exactly what your payment's going to be, what you're looking at out of pocket, if you're asking for closing costs, not asking for closing costs. So that way they're putting in an offer with confidence, knowing that when we sit back down and start all the official loan application and paperwork, that they're not blindsided by,
Mhm.
out of pocket or what their payment's going to be.
Yeah, that makes sense. Okay. So I would, imagine someone's coming to meet with you. They're kind of familiar with what their budget is. Some people might be really familiar, with what's coming in, what's going out. But as a part of the process, you're helping them to look at a snapshot of, where they are today, and then understand what the budget's going to look like after purchasing the home, and then giving them
Absolutely.
that path forward to get pre-approved. You closely with their lender or with their realtor, sorry, and all through the process, you're helping them with the financing.
Absolutely. It's basically just educating them, as I said, on exactly where they are and what they need to do, or
Hmm.
what the plan is now, so they can leave with confidence and know exactly where they're at and what they need to do.
That makes sense. Okay. And then, so what would you tell someone, if someone's watching and or listening right now and they're thinking about buying a home, what's, what's maybe the top thing or top couple of things that you would, what would you say to that person today?
I think the main thing is just making the appointment and coming through the door, or making that phone call and figuring out where you are at. I mean, I think one of the biggest misconceptions is it's really, really hard to get a loan. But like I said, it's that simple. It's credit, what type of money you're looking at out of pocket, and what fits your income as far as a debt to income ratio. Other than that, it's just tailor fitting to you and your family and your lifestyle. So make the call, come in. It doesn't cost anything, and find out where you're at. And most people, most first-time home buyers that I talk to, when they finally make that leap, so to speak, they're pleasantly surprised and figure out, wow, that wasn't that bad. and they get the information, and that way they can make an educated decision on what works for them.
Yeah, I know for sure. I'm guilty of a lot of times thinking things are going to be a lot worse or harder than they actually are, and then it sounds like, yeah, you're saying get started. If you don't get started, you're going to stay. Nothing's going to change, right?
You're exactly right. Whether people, maybe they know they have bruised credit, right? Well, and there's a misconception that they're going to walk through the door and it's like, hey, you don't have your credit doesn't qualify. Get out of my office. No, that's where we sit down and we come up with a game plan to get you in a position where it might be a year from now before you're in a position. But if you don't start today and they stick your head in the sand, so to speak, you're going to be in the same position a year from now than you are today. It's the old saying, when's the best time to plant a tree, right? Well, 20 years ago. Well, what's the second best? Today. So, make the call and make an appointment and get educated and figure out where you're at.
Get started, get the information you need to help move you forward. That makes sense. Okay.
Absolutely.
We're getting a couple of questions. So HT has a couple of questions. Can you do a commercial loan? And then also, can you make stated income loans? So HT is asking a little bit about what types of loans are you doing, Tony?
So I primarily do residential loans, but I have some great referral sources for commercial loans. Have being in the business for 15 years, I've networked and made a lot of great contacts, and so I do have some sources for commercial loans, but myself personally, just simply residential, refinancing or purchases.
Okay. Another question coming in. What is the rate today? So could you speak a little bit about, I know rates have been in the news for, seems like the last couple of months.
Sure.
And, people are always talking about rates. So could you share a little bit about the rates that you're seeing today, or just rates in general? What are you seeing?
So I get that question all the time, and dance around it, but it's, the rate is dependent upon, number one, what's your credit score? Number two, what type of down payment you're looking to do. The more you're putting down, typically you're going to get a better rate on that too. Higher credit score, you're going to get a better rate. And then also, what type of loan program are you looking at? Say a government insured loan as an FHA, USDA, or VA, or a conventional loan. But to give an answer, say on a typical 30-year fixed conventional loan right now, rates move a little bit from day to day depending on what's going in the market, but you're looking probably anywhere between 2.625 to 2.875 typically, with considering good credit. Now, if you have lower credit scores, on a conventional loans are very FICO score driven. So you're going to take a much bigger hit to the interest rate with the lower FICO score on a conventional loan than you say are an FHA. And that goes back to how we're going to tailor fit what best fits you in your situation, where maybe an FHA loan would be a better situation with a lower credit score. Say a lower credit score on an FHA, you're still looking, low threes right now all day long, which is crazy to say, but I'm doing this enough to where rates are at all-time lows and right now, and who knows how long they're going to be here. But strongly suggest to take advantage of them while they are.
Yeah, great advice. So rates today, it sounds like they're going to be different for everybody. Everybody's in a different situation. So there's a lot of variables that you're looking at. It sounds like in general, you're seeing high twos, low threes. And then, really by the time that someone's done having a conversation with you and going through your process, you're going to be able to tell them exactly what their rate would be based on all the information that you've looked at.
Absolutely. And that's put exactly right. With that said too, hey, this is exactly where things are as of today. Right? And being completely transparent with that to where, a week, 2 weeks, a month from now, there's no telling where rates are going to move. I mean, they could be lower, they could be, they could be higher, but that way you know exactly where you're at. And with that said too, let's say a month from now, rates are higher. The boats rise and fall in the same harbor, right? If rates are moving up, so is everybody else's. And if they're going down, everybody else plays in the same arena.
Got it. Okay. And so, you mentioned that sense. So things change, no one knows if they're going to stay the same, go up or come down, but right now that's kind of where they're at. And so how is that historically? So think about 5 years ago or 15 years ago when you started, where were you seeing rates then? Could you help people understand kind of
when I first got in the business, I mean, just a going 30-year fixed loan was, probably averaging around 6.5%. And them, go down over the years, with the crash in the market, rates definitely went down, which was helped by the feds and really kind of juicing the rates to help get the housing market back on its feet. But historically, I mean, I've been doing this for a little while, and I've talked to colleagues that have been doing this twice as long as I have. Nobody's seen rates as low as they are right now. This is as low as fixed rates have ever been.
Yeah. Historical lows is where we're at. And what does that mean? From a monthly payment standpoint, let's just say somewhere right around 3%, like they are in today's environment, versus 6.5 from, when you first got started. What does that mean from a monthly payment standpoint?
Well, I'd have to run some exact numbers, but it means your buying power is much more, today you might be qualified for a $350,000 home where rates move up a point, 2 points, 3 points. Your buying power is going to go considerably down. I know a lot of people also, they're okay, our housing price is going to come down. They're kind of sitting on the fence whether they're going to jump in the market or wait to see what happens with housing prices. But even if housing prices back off a little bit and rates go up, your payment is probably still going to be higher than where you're at with these low interest rates that we have today.
Okay, that makes sense. So, okay, so it sounds like with rates being as low as they are now, people are either going to maybe do one of two things. Maybe they might look at that and say, well, money costs less. Now I can buy more home. So I want to, I'm going to go to the market and I want to buy, something that maybe was a little bit out of my range before. Or someone might say, well, money costs less. I still want to get the same home, but I'm going to save maybe, $200, $300, $500 a month as compared to, where they would have been 10, 15 years ago. Is that fair? Does that sound about right?
That's exactly right. And in the monthly payment, absolutely, that you're getting a good savings there. But even looking at the amortization of that loan over the duration on that lower interest rate, where what you're going to pay in the total interest on that could be $50,000, $70,000, $100,000 less with that interest rate than it would be with interest rate.
So I guess that gets back to excuse me, not everybody's going to want the same thing. Some people might want to save money, control costs. Some people might have their eye on that dream home. So it really gets back to you meeting with them, understanding what are their needs, what do they want to, what do they really want to accomplish with buying their first home.
Exactly right. And that is one of the big parts of the conversation that we're going to have when we first sit down.
Got it. Okay. And then could you tell me, so tell me about a time when, when you help people through that process, they come to you, they're thinking about buying a home, you help them through the home buying process, and then, they get that home that they've been planning for. What does that look like? How do your clients feel? Or, what are some of the things that you've seen happen, from helping people?
I mean, I can just speak for me personally. It's why I do this, where, I mean, like I said, I've helped all kinds. I've helped people that maybe they're moving out of their starter home as a first time buyer, and they've gained a lot of equity through the market, and they're selling it and buying that forever home, so to speak. And that's gratifying too.
Yeah.
Or helping the investors get in and buy multiple homes that really kind of shores up their long-term financial plan and retirement goals. But I tell you what, helping first-time home buyers get in and just seeing their faces when they get those keys for the first time, and really accomplishing something that probably at one time they thought was just nothing but a dream, feels great.
Yeah.
Or moving back to the folks that maybe had a little bit of bruised credit, right? And we went through, maybe 18-month process of getting them from where they were to in a position to be able to get into that home, and just seeing all that blood, sweat, and tears pay off. This makes me smile. It's a great feeling.
Yeah. No, that reminds me of really two stories. One was, I don't remember how many years it's been, but my wife, Victoria, and I were in that position when we came to you. We wanted to buy our first home. And we had to wait 12 months to, do both of those things. Was really a plan to improve the credit score and then also save money for that down payment. And, but that year went by fast, man. And I remember, just having a plan, just having a target to hit and having a plan to get there, helped us make that happen. And that year went by fast. And then, I know I also, think about earlier in the year when the coronavirus hit, I had, there's a home that was in escrow, and there was an out of area lender. There were some challenges that the buyer ran into, and the deal ended up falling out. And really what happened was, the lender had issues with their process. And when the coronavirus hit, everything for them just kind of came to a standstill. And then, there was a new buyer that came into the picture, but I remember you helping them, and the process that you just laid out, being able to walk them through that and, do all the work on the front end and tailor something to fit their needs. It made all the difference in the world. I think we went from the deal being stuck to closing in something like 21 days, really fast. So thank you for that. But both happy endings for, for us, and then also, the seller and buyers in that transaction.
And absolutely. And really what it's all about is just taking care of people and putting their needs first. And everything else is going to take care of itself.
That's the right way to do things.
Yeah.
And so does it always turn out that way? Is it always a happy ending when you're working with people?
I'd like to think so. Honestly, when we sit down in that initial conversation, people don't always hear what they really want to hear at first. There are, hey, your credit is not in a position to do this right now, or your finances are not in a position to do this right now. But like I mentioned earlier, my philosophy, the answer is always yes.
Yeah.
It may not be today, but what is the game plan to get you to the yes? And able to roll up my sleeves right along with you if you're willing to put in the work too to get you there. So maybe glass half full there, but I truly believe if all parties involved are ready to put in the work, there will be a happy ending.
Okay. That makes sense. So one more question that's coming in. What is a good score? So good credit score, I believe is the question. And is there a range that people kind of need to get to, or what do you say relative to credit score?
Well, really, I mean, top shelf credit score is anything 760 and above, which
Okay.
is probably the top 2%, right? Not everybody has a score. I get people all the time, they might be, the difference between that 760 and an 805 is just bragging rights, right? Anything above 60 is all top shelf.
Got it.
Conventional loan, it really runs in 20-point buckets. Above 700 for conventional is really ideal.
Okay.
We want to be above a 680. You start getting below a 680, we're probably, maybe start considering an FHA loan a little more. But we can go all the way down to a 620 credit score with conventional. We can go down into the 500s with an FHA loan, with a VA loan. So, I mean, it's depending on the loan program and loan product, it's a little bit of a different answer. But really, you want, great credit is 760 or above, but really want to be over 700.
Got it. Okay. So that's the ideal range, but real life, not everybody's there, but they're like you said earlier, there's strategies, things that you can do to help move you up through that through that range.
And with that said too, even if you don't have that stellar credit, rates are so good right now that even if you're not in the high twos and maybe you're in the low to mid threes interest rate, in today's environment, you'd be like, oh, that's such a high rate. But in historically speaking, it's still all-time lows. And to get in still at that point where maybe a year from now, it's hard to say where rates will be, but a good rate in a year from now might be 4.5. Good idea at these low rates to still at least see where you're at and what your options are.
Yeah, that makes sense. Okay. So if you think about it from a historic standpoint, even if you have a credit score that's not perfect, you still may be getting a much better loan from a monthly payment standpoint than someone even, with perfect credit a year to 5-10 years ago, because rates are so low.
I mean, even a year and a half ago, the going rate was mid fours. And that was for 760 plus credit scores, and just the rates have come, like I said, even if the credit is not top shelf, you're still, historically speaking, getting a darn good rate.
Yeah. So it's a great time to buy from a low interest rate standpoint.
Absolutely.
Okay. Tony, what parting advice do you have for any first-time home buyers that are listening? Is there anything I missed, or any parting words of wisdom?
No, I think we've covered it all. And, kind of sound like a broken record, but get in with a good lender and figure out where you're at, and just make that first step, that leap of faith, just to at least talk with somebody and come up with a game plan. And you might be pleasantly surprised that, it's not nearly as scary as you think it is. You could be in position to be out there shopping for a home tomorrow.
That's great. Well, great parting advice. If someone wants to connect with you, has additional questions, or wants to schedule that consultation, how do people get a hold of you?
Cell phone's the best. I have an office line that runs actually directly to my cell phone also. Either phone call, a text, if you want to email, very responsive to all three. So it's just a matter of reaching out and setting a time that we can get together and look everything over.
Got it. Okay, perfect. So what I'm going to do is after we finish up, I'm going to put a slide up with your information so people know how to get a hold of you. I want to say thanks for joining today, Tony. Always good to talk with you. I know the people that are watching this or listening to this got a lot of really great information. So thanks again for your time.
Hey, thanks for having me, Dan. I appreciate it.
All right, so look for that slide that's going up in just a second here. I want to say thank you to everyone who joined today. Remember to go to my website, dandelriel.com. We're going to be putting up this recording for you to rewatch or share with friends, family members, anyone that you know that's interested in buying a home or has financing needs. This video will be there for you to watch it. We'll also be putting up a podcast so you can download it, listen to it on the go, and you'll have the show notes that are posted. So whether you prefer to watch, listen, or read, that content's going to be there for you. And we'll also be releasing some information about some upcoming shows. Next week, we'll be talking about the real estate market, what's happening there. And then 2 weeks from today, we'll be, I'll have a special guest, Geraldine Serrano, who's going to be talking about how to save money on taxes and also increase cash flow. So that'll be a conversation about investment property. And we'll continue to send resources your way. So thanks again, everybody, for attending today. And thank you, Tony, for your time and all the information. Appreciate it.
Thanks, Dan.
All right. Have a great one.
Yeah, you too. Bye-bye.